Can you hit 1 million pesos in savings and investment in 5 years' time? In this video, I'll break down the math again that shows you how we hit our first million in investments in less than 5 years. So, without further ado, let's go into the slides. So, a quick disclaimer before we start with the slides. I am not a licensed financial planner. I'm just a dude showing his numbers in hopes of educating Filipinos and inspiring them to start their financial independence journey. For those of you who are landing on this channel for the first time, my name is Patrick Mabilog. My friends call me Kiko. I'm an entrepreneur, an investor, a Lord of the Rings fan. I got married at 22 years old to my dream girl, and then we racked up a six-figure debt at 23 due to some problems, and then got into debt again at 25, but eventually built an eight-figure business from scratch and an investment portfolio that reached eight figures across several investment vehicles. We're told to save and save and save. But in 2026, with inflation where it is, saving is actually losing money slowly. Inflation numbers in the Philippines has now reached 7.2% in April 2026. That means if you have about 10,000 pesos in your bank account, for example, then you just lost 720 pesos, which is 7.2%, which was lost to inflation, right? And your money now is only worth 9,280 pesos. And the strategy that we've used over the years is actually very boring. And it doesn't need high intelligence, thankfully, because we have very little of that. And we don't need rich parents, which, again, thankfully, because we don't have any of that as well. And I want to share with you today in this video the three decisions that we've made that have doubled our speed when it comes to building our net worth. But first, before I share those decisions, and probably most likely number three is the biggest game changer of all, I need to really walk you through and help you understand why your current savings mindset might be keeping you broke. And so all of this starts with a case study, no? Uh, and in this case study, a quick story right here. You look at this property, and this was a property that was owned by someone that I know. And before that person moved to a different, city, which that was the plan, they had a dilemma with their family. Do we sell this property? And so when they moved, essentially the decision was that they wouldn't sell the property. And I know this for a fact because that family was us. And when we started to say that there's no, turning back from this, we definitely want to move. And everyone was telling us, sell the house, sell the house. What are you going to do with the house? But the decision that we made is we're not going to sell the house. We want to rent it out. So when we moved, we decided to turn this property into a rental. And when we got our first tenant, we eventually started renting this property out for 18,000 pesos per month. Then we decided to do one thing, that we're going to take that money and we're not going to use it for our budget. Because again, everyone was telling us, well, that's good now because you have extra money to pay for your expenses, to get a better car and all of that. And we said, nope, nope, that's not what we're going to do. Instead, we're going to take that money, all of that money, and we started investing that into ETFs, or exchange traded funds. ETFs are these financial tools that put together different kind of stocks. So normally when people think about investing in stocks, they think about investing in individual stocks. And so the question that I get asked a lot when it comes to investing is, what's the best stock to pick? Which I think is the wrong question, especially if you're an investor, a beginner investor, and you don't really plan to do like the fundamental and technical analysis, which I tried to do for 6 years. It's a lot of work. It's a lot of having to study. And so if you pick individual stocks, the risk is a whole lot higher. And we lost a lot of money by doing that. When we found out about exchange traded funds, it really changed our way of investing, because exchange traded funds, instead of investing in individual stocks, it puts together a whole bunch of stocks to kind of hedge and diversify. So, say for example, if you're putting in money into ETFs that are tech related, then you have access to all of these tech companies in the United States or any other place, and you kind of like invest small portions across all of that. So like investing in Apple, in Google, and so forth. That's how an ETF works. So when we decided to invest in ETFs, we decided that all of the money from our rental would go into ETFs. And this is what happened. Let me show you the breakdown. So we did that for 4 years, right? So really quickly, so just give you like the numbers. So 4 years, we put in 18,000 pesos per month, and the return rate that we got on the fund that we invested in, which was a global market fund, was 9%. So some of you might look at that and say, wow, that's ang hirap naman nun, because in the Philippines, you don't even get like 4%. Well, that's the reason why we chose the global stock market, and I'll get to that in a little bit. But when we invested in the global stock market, we averaged out about 9%. And because of that, in 4 years' time, that 18,000 pesos per month rental income that we were putting into the ETF that we were investing in ended up becoming 1 million pesos. And so in less than 5 years, in 4 years' time, we were able to build an investment of 1 million pesos, which that was the best decision that we ever made. Instead of increasing our lifestyle or building, more expenses into our life, upgrading gadgets and our car and so on and so forth, we decided first to invest. And I want to share with you the three decisions, no, that got us to that seven-figure mark. And the first one was a decision called freeze and flow, which I'll explain a little bit. Second is the global pivot. We made that pivot, and I'll explain that also in a little bit. And third one is the active passive shift. So let me explain these decisions one by one, and hopefully you learn from these frameworks and that you can apply it as well in your own personal finance. So the first one was the freeze and flow decision, meaning that we killed lifestyle creep. When we started out, we had a very basic budget as a family. We were spending about 60 to 80,000 pesos per month. And in the past couple of years, where we've now increased our revenue, not just through our passive investments but even in our business, our our expenses have actually not gone up, because we made some very important moves and shifts in our own life. And the biggest shift in our life was that we decided not to shift anything, right? Because like when we come up with more money, most of the time we start to make these big lifestyle changes. I was looking at these pictures a couple of days ago, and it came out in my Facebook memories. The one on the left, sorry, it's a bit disgusting. You kind of see it for yourself, no? Like, for the longest time, I was always a cheapskate towards myself. I didn't buy new socks all the time, kasi ang isip ko naman is, I was gonna see, my toes if I'm wearing shoes anyways. I know it's a bit unhygienic. That's a good example. I'm not saying that I'm a good example, right? But the other thing as well is the car that we're currently using, which is a Montero, which is a 2017 model. And we bought this secondhand for about 900,000 pesos only, instead of having to buy a brand new one. And it's top of the line as well. So these kinds of moves were the kind of moves that really helped move the needle for us, because as our income increased, we decided that our lifestyle would not increase with it. There's this concept that I read in The Psychology of Money by Morgan Housel. It's a book. It practically changed the way that I view finances. So we always think that, okay, if you want to have financial freedom, then you have to have more money and get more money. But that actually never happens most of the time. Or if it does happen, it doesn't happen at the level that we want. And I've seen in my personal life as well that every single time your income increases, that there's always a better lifestyle that you can pursue. So when you start becoming a business owner, for example, and you see your business owner friends buying better cars, going on more vacations, buying expensive brands, and we think that that's the only way for us to get financial freedom and to get the happiness that we think we deserve. No, but we're never really taught the math that helps us to get clear about what our money goals should really be. And so because of that, the concept that, again, going back to the concept of Morgan Housel, we start to see that the goalpost keeps on moving. So you save 1 million pesos, you save 2 million, you save 10, you earn 100,000, 200,000, 300,000, but it never feels like it's enough. And because the problem there is that, for the longest time, we're taught to pursue financial freedom, where instead, what we should be pursuing is financial independence. Completely different concepts. Financial independence is this point where your passive income will cover your expenses. And when you reach this point, work becomes optional. Our goal for the past couple of years is to reach financial independence. And we're actually on track to hit financial independence in the next year or so. At some level, we're already work optional because of the business that we've built. But with the right, the right kind of decisions in the next couple of months here, if we do it right, we're gonna get to a point where we don't even have to work to earn anymore because our passive income can cover our expenses. There really has to be this shift in our mindset where we're no longer pursuing financial freedom, where we're thinking more money, more income, more growth, but more importantly, we're choosing financial independence. And the big difference there really is I'm no longer thinking about active income, we're thinking about passive income, which kind of overlaps with another decision, which I'll get to in a bit. Really quickly now, if you want to really build financial independence, I've created this free financial independence playbook, and I'm going to put the link in the description below. If you're a Filipino and you want to have a wealth creation plan that will help you to build your net worth to multi-millions and then create financial independence, then there's that guide that's available for you, free for download, no commitment. You can just get it if you want to. So, okay, going back. So, the second decision that we made was the global pivot. So a few years ago, we chanced upon a connection on Facebook, and this connection was, you know, based in Singapore, and he currently now he's our wealth manager. He helped us to open up like an investment account in Singapore, which was really blew our mind because we thought that okay, if you want to invest in Singapore, you have to be based in Singapore. We're not based in Singapore. We live in the province in the Philippines. But then when he told us, bro, pwede ka mag-invest dito. It's a free market. I was like, wow, really? And when we invested in Singapore and we met Rico, our wealth manager, we never imagined like one day that we would be global investors. For the very reason that we were never taught that we can be global investors. No one told us about it. It's not taught in the educational, in the educational space, and not a lot of influencers and content creators really talk about becoming global investors. We know for a fact that there are feeder funds and all of this available through mutual funds and banks and all of that. But ang laki ng fees kasi. But then when people, when I tell people that you can actually start an investment account in Singapore, even if you don't live in Singapore, it really blows their minds because it blew our minds as well. But, I just want to share that with you essentially that I guess like the principle that we learned there is, keep your mind open and always be on the lookout for opportunities. Keep a what I like to call an empty cup. Kasi ang dami nating mga preconceived notions na hindi ka pwede mag-invest sa Singapore kasi hindi ka naman based doon or nasa Pinas ka lang naman or you can't really invest millions. Well, we didn't invest millions. We only started with a small amount. And eventually that grew and grew and grew as we continued to trust our wealth manager more and as we started getting access to more investment vehicles. But all that to say, we made that shift now to start getting into global investments. The reality of the Philippine market right now is it's been sideways for quite some time. We still have some local investments, and they haven't been doing pretty well. I think at the most probably we get like a 4 to 5% per year per annum return, CAGR, or compounded annual growth rate. But it's not really that good because if inflation rate once again is hitting 7.2%, I know this is kind of like a freak incident, but I think it's closer to like 4 to 5% every year, and you're only growing your investments by 4.5%. You're just beating inflation by a hairline. And so if you really want to um, hack growth, you need to realize that there are so many other markets out there that are doing way better than our country. Now, of course, some people will go and say, well, that's a big betrayal to your country. But I mean, let's face it though, if our country isn't doing good in this space, and no hate to our country, I love our country. Otherwise, I wouldn't be living here even if there are opportunities for us to work abroad. But there are just some areas where our country does not do well. Our country might do well when it comes to food and hospitality and tourism and beaches and all of that. But financial markets and investments, let's face it, the Philippines has a crap economy right now. And that might sound controversial, But it's just the reality. You look at how our market is performing, you look at the available, retirement funds that are given to us. Our pension system is, I think, like top three worst in the world right now. And you go at that, and like from a pragmatic standpoint, you have to realize that I can't rely on my country's, investment and retirement systems if I want to retire comfortably. And so that global shift really has to happen. So if you're here and you're saying, I need to make a pivot, I really want to recommend for all of us and suggest for all of us. Again, this is not financial advice, but really it's just like looking at the facts and saying that if you really want to grow your investments, there has to be a pivot. And the pivot is really global in nature. So that's the second decision. The third decision was the active to passive shift, which was the biggest mindset shift for all of us today. There's this big misconception about amongst Filipinos that the only way for you to retire is to start a business. And I saw this, this big influencer talking about investing at one point. And his hot take was that investing in assets that give passive income isn't a good move. And he was basically saying that you should invest in a business instead. He was sharing his experience where he invested in rental properties and it was giving him 20 to 30,000 pesos per month, but then he sold that property and then he invested in his business instead, and he was making like 1 million pesos a month daw, sabi niya. I don't know how true it is. Now, again, I'm not against businesses because we own businesses as well. We have businesses that build active income. But hear me out with this, no? And let's just talk about scenarios. How likely is it that if you invest in a property, that the value of your home will go to near zero? Probably not very likely. Because let's say for example, okay, masunog yung bahay. Pero you have insurance naman eh. If you buy insurance, which by the way is very important if you're investing in property. And if you're insured and your house is maintained well, there's a very low risk that your business will go to zero. Now, if you invest as well in you know, your global markets, let's say for instance that you have investments in S&P 500, how likely are you to lose the entire value of an investment in the S&P 500? It's very low as well because you'd have to see the entire US economy collapse. Apple will start losing market share, and Meta, people will not use Facebook anymore. Google will shut down, and the other 500 companies on the S&P 500 list will go bankrupt in a matter of months. That's what it will take for you to lose all of your money as in the S&P 500. So it's very low. It's very unlikely for you to lose your investment in this S&P 500 completely. But how likely is it for a business to go bankrupt? It's actually very likely. Um, I don't have the numbers in front of me, but a very big percentage of businesses don't even last more than 5 years. And so if you have a business and you hedge all of that and you pour all of your investment into your business, if it's a coffee shop or if it's an affiliate marketing business, I hear stories all the time of these businesses going out of business. And I've seen it all the time. And like I've lost businesses as well that were doing very well for 3 to 5 years, and then all of a sudden they did not do as well anymore. So what I'm basically trying to point out here is yes, a business can give you better active income. But from a standpoint of creating passive income, it's not really the best solution for you. So if you're a person who wants to think long term, if you're thinking 3 to 5 years, definitely a business is a good investment. And again, I want to make it very clear. I'm not saying don't invest in a business because I've invested in businesses as well. But it's not an either or kasi. It's not that you invest in businesses and not in other active incomes. I believe that there really has to be a point where you start to shift your investments from active to eventually pushing it more into passive. There's this very important uh, principle that I learned once again from Morgan Housel, not from the book Psychology of Money. I think it was in one of the podcasts that I was listening to where he was interviewed, and he shared this principle where the idea is this: no, you have two options. Let's say, for example, you're a gambler, which is a very bad example. I realized, but sabihin na lang natin, no, and in a fiction world, you're a gambler and you have two options. The first option is to play Russian roulette. And if you win Russian roulette, you will win $1 million. So like 60 million pesos. What are your odds of winning there? So if you're not familiar with Russian roulette, you take a revolver with six, bullet chambers. I think you call it that now. And then you put one bullet, and then the other five chambers are empty. And then you turn the revolver and you point it on your head and pull the trigger. Your odds of winning is actually 5 to 6, no? And your odds of losing is 1 to 6, because six chambers, one bullet is really good odds, no? There's a very high percentage that you're gonna win. So that's your option one. The option two is, let's just play blackjack, no? And if you win in the blackjack game, I don't know how to play blackjack, but let's just say, for example, you'll win $100,000. And if you win, then you get that $100,000. The chances of you winning in blackjack is like 1 to 1 million, because of the different like variations of, the combinations of the cards. But most people in the right minds, if you ask them which game will you play to win, even if Russian roulette gave you $1 million, you would still choose blackjack. Why? Because yes, you have lesser odds to win with blackjack, and the money is smaller, but the downside is a whole lot lower. Because if you lose in Russian roulette, you don't just lose, like $1 million. You practically lose your life, because bang, gone. No? Versus blackjack, if you lose, then nothing really lost, right? You just lost the game. And so what I'm trying to get to here, no, is if you're thinking about how you want to build a future for your family. I mean, this is the reason why I'm so deep into building wealth, is because I want to make sure that these three people can really have a good life. No, and I'm not gonna gamble their future just because I think that there's more upside here. There's a point in our lives where we have to kind of like mitigate the risk. Now, I'm not saying, of course, that you don't take risk, no, but you have to make calculated risks. Kasi if you rely on a business to last for the next 5, 10, 20, 40, 50 years, the likelihood that that business is going to survive that long isn't actually that that likely. I mean, because like a lot of small businesses either go out of business or they kind of lose momentum after some time. And there's also the fact that that's actually an active source of income. It's not passive, because you're still going to have to run the business. You're still going to have strategies. Every single year you have new competitors coming out. And then now you have disruptions like AI coming to the mix. You market can sometimes go down. The crisis has shown us just how hard it is to run a small business in this freaking country, right? And all of these things point to the fact that if you rely on a business for retirement, again, for retirement, not for income, not for active income, but for passive income, you're playing Russian roulette. But if you want to play the smart game, it's more likely for you to have a more stable and a better source of of passive income in your later years if you invest in other sources of income, other assets like property and ETFs, global markets, bonds, so on and so forth. Because this is why we're building. And I want to really land with this idea, no, that this isn't just a money conversation. When we're talking about investments, we're not just talking about how much money can we accumulate so that we can show it off, and flaunt it, and so on and so forth, but because we want to build money for the people that we care about, for the next generation. I mean, these two, our two daughters, they're the reason why I'm like very heavy in investing right now. And I'm sure that most of you listening today, you probably have, daughters, sons, children, grandchildren, even like family members who are the next generation, younger than you, and you're thinking about, am I gonna be a burden to these people when I'm in my old age? And that should push us really hard right now to make the right decisions. And so those three decisions were the biggest for us. Those three decisions, I made those three boring decisions for these three people. I don't want to be a rich person. I never did. I just want to give the best life possible today and in the future for my family. So don't make investment bets because you just want more stuff, or because you want more zeros in your bank account. Do it for the people who matter most. Hopefully, this was a helpful video for you. And if it was, then as always, you can subscribe. and just follow our investment journey and journey with us as well. I hope that you take these principles, you make the right decisions. If those decisions make sense for you, go ahead and make them. If you don't agree with them, completely fine. I'm just sharing with you my personal experience, and hopefully you can take that experience as well and apply the ones that really align for you in a way that feels comfortable. So thank you so much once again for watching this video, and I'll see you in the next one. Bye.